All right. We are live. Hello, everyone. Welcome to Be the Boss of Your Money. I'm Mitch Goldberg, your host. And you guessed it, we talk about you becoming the boss of your money. And what does that mean? Basically, it means, let me start that over. And what does be the boss of your money mean? Basically, it means taking control of your financial life. Think of it like this: you have your personal life and you have your work slash business life. And we talk about things like work, business, money, but it all has to do with money, right? That's the aspect that I help you with, not to exclude other things. Because if you just focus on getting better with money, well, you have to focus on your health, your relationships with family and friends, your overall well being. There's a lot of things that we need to focus on. And it's good to have good habits, because when you have a good personal finance habit or a personal hygiene habit, like you automatically brush your teeth every morning and you brush your teeth every night before you go to bed. You don't have to think about it. Those are just good personal finance habits. These are the things I like to talk about with money, though, like contributing to your 401k. That's a good habit to be in. I think it's also good to have a Roth 401k, by the way. A lot of people don't talk about that enough, but I think that's really important to have as well. So, a Roth 401k is a really good thing to have. What are some other good personal finance habits to have? Well, don't spend money that you don't spend more than you make. The way to do that is to take the money you make, you get your paycheck, separate the money for savings, the rest of it spend, and don't feel bad about spending the rest of it, because you met your goal of saving a certain amount of money. These are like really good personal finance habits to get into. Paying your bills on time, opening your mail. These are good personal finance habits. I know opening your mail sounds like an easy one, but I feel like ever since the Great Recession of about 12 years ago, people got into the habit of not opening their mail when they're expecting bad news. But you got to open up those envelopes, or log into your account when you see that a new statement is available. All right, so let's get back on track here. Let's talk about the market. Let's talk about stocks. Let's talk about you. Take control of your money. We're going to roll the intro. Couple of stocks to go over today. Three stocks of the day. We have the election. Tesla, which is one of those three stocks, hit a 52-week low today. People have been asking me, hey, Mitch, you think I should buy Tesla? And I said, as just an individual standalone stock, for the heck of it, if your goal is to own it, then buy it. But no, I wouldn't buy it for me. But you're a different story, right? Maybe you know something I don't. You saw the stock going up, so you figured, oh, it must be good. I must be smart, because the stock went up and it went up after I bought it, and then it's down again. So you must be dumb. No, no, you're just following a crowd. You're following a trend, and you don't really know what the trend is, when to get in, when to get out. So, what can I tell you? Tesla is letting people down like other big tech stocks. Whether if you consider Tesla a tech stock or not, it is one of the biggest companies in the NASDAQ. All right, so let's roll the intro. We're going to have a good, quick show today. While you're watching, would it kill you to say thumbs up? Thank you, Jerry. You are so supportive. And, give it a thumbs up while you're watching, a heart, an applause, whatever reaction is available to you, depending on which social media platform you're watching on. And I love hearing from you. It's the best part about doing this. So hit me up in the comments with your questions, or just say hi, say what's up, and you'll make me very happy, and you'll spread the good word about this show to all of the other people in your contacts. And that gets the show out there, which is important to me, because, our sponsors really appreciate that. And since I am the sponsor, because I pay for the whole show and do everything out of pocket, it's always good when more people are watching, and it helps me in that regard. It helps me build my business, and the more I do that, the more it's good for you. You see this? It's circular. It's just let the goodness go around. We need more goodness. So, like the show. Here we go. Thank you so much for joining me. All right, we are just getting started. A couple minutes late today. A couple things to do today. Whatever. I think we know basically the show is a 4:30 show, but I like to say about 4:30. So like 4:30 to 5. It's like a guideline. I will reimpose at 4:30 deadline, especially because some people were calling me Mr. 430, Mr. 430, and I kind of liked it. It's like my time slot. Like everyone knows, if you're going to live stream, you don't do it at 4:30 Eastern Standard Time, Monday through Thursday, because that's me. That's my spot, right? I see Tina is out there as well. Thank you very much, Tina, for the love reaction. Thank you for the love reaction. So what are we talking about? Let's go right to the stocks of the day. Okay, let me pop myself up there. Let me get rid of the social media icons. Okay, first stock of the day is Tesla. Second one is Carvana. Third one is Palantir. These are all unique situations because they were also overwhelmingly loved. But you see that little yellow there, 52 low. That's a 52-week low. That's your low. 52-week low. 52-week low. Well, it didn't say 52-week low here, but earnings are out. But let's look at Tesla first, okay? How did Tesla do today? Tesla went down $10 a share today to 197. I kid you not, a dear friend of mine just texted me like 2 weeks ago. Do you think I should buy Tesla? I'm like, we need to talk about this. It's not, should you buy it? I don't know. Can you afford to take the risk? There's a whole bunch of things that goes on. It's funny. People always ask me, should I buy this? Should I buy that? The answer is always, it depends. Now, uh, now when somebody asks me if they should buy a Tesla, for example, some people I can give a quick answer, yes or no, because I know them. I know what they're looking for. I know what they're looking to do. I know why they're asking me. I know about their net worth, their liquidity, because they're such a long time client of mine. So I can answer quickly. But a lot of other people just kind of say, I'm friends with Mitch. He must know what he's talking about. He does a live stream. He seems like a smart guy. Thank you very much. They asked me, should I buy a certain stock? I'm just picking a Tesla right now. And the question is always, or should I say the answer is always, it depends. If owning Tesla is your goal, then of course, go ahead and buy it. Anybody who has money in the market could buy a few shares of Tesla. So if you want to own it, own it. And there are some people who like to own certain stocks. They feel good about them. Feeling good is okay. I know some of you are going to say feeling good's got nothing to do with it, but I myself, I own quite a good number of blue chip stocks. I feel good about owning them. I feel like I own a real slice of Americana. I own the best companies in the world, and I'm proud to be a shareholder of these particular companies. Uh, Tesla is not one of mine, but it's a popular stock and it requires me to be updated on it. But as you can see, the stock hit a year low today. Low. I mean, this is the lowest it's been in the cycle. The stock, the high on it, the year high is 400, but we know that at one point the stock was a good deal higher than that. In any event, you know, concerns about sales, concerns about the CEO taking his eye off the Tesla ball because now he owns Twitter and he's got to manage that. So it's tearing him in two different places. Now he's a CEO of Tesla. He's more than just a CEO. He's a CEO, owner, chairman, everything of of Twitter. So that is one thing. So I'm not enthusiastic about it. When my friend asked me about Tesla, my answers were not particularly enthusiastic. It was, but I really was concerned about this person in terms of what her risk tolerance would be. Next one is Carvana. Now, Carvana, as you can see here, was $300 a share, over $300 a share. It is now $7. So it's lost more than 95% of its value. It hit a 52-week low, and I'm sure there's somebody out there, just like yesterday, Friday, and the day before that, and the day before that, it kept hitting 52-week lows. Somebody out there will eventually be right. If you say every day this is the low, eventually you will be right. I mean, eventually. If you say a stock is going down, and eventually, if you say it every day, eventually you'll be right. So why not make the call every day so you can finally say, I called it. I said, on November 7th, for example, 2022, Carvana would make it so, and I was right. Well, yeah, because you make that call every single day. So eventually you're going to be right, and that's the thing you're going to tout. I called the bottom. I can't stand when people do that, but that's okay. People are entitled to do what they want, and you are entitled to believe what you want. Hopefully you put a little bit more critical thinking into something like that when somebody tells you they call the bottom or top of anything. In any event, even a broken clock is right twice a day. So Carvana was a pandemic stock darling. It was the way to buy cars. People needed cars, and they just had a lock on. Seemed like they had a lock on the used car market, but apparently they don't. They don't have a lock on anything, and it was just become a disaster. $300 stock. Okay, so let's say you didn't pay $300 for the stock. Let's say you paid half of that, 150. Let's say you paid $20. Still, $20 to $7 is still pretty freaking bad. And the last one is Palantir. Now, Palantir was as high as 27. I still don't get what is the big deal with this company. But if we look at the chart, all-time chart, it was at 25. But it's this very popular tech stock software company. Gets have government contracts. They're supposed to be able to do a lot of cool things, but the stock has gone from almost 30, down to 7, and that is only down 61% on the year. So this is what happens. People get caught up in the enthusiasm, and I could look at Roku, and I could look at Netflix, I could look at Facebook, and lots of others. People got caught up in enthusiasm, and stocks get rocked. And I could also even take a look at Amazon and Alphabet, which is Google. This is why it's such a seriously tough market, because so many stocks are down greater than 50%. Many are down greater than 70 and 80%. But those are the stocks for the day: Tesla, Carvana, and Palantir. Let's say the markets at today. Okay. Dow up 400 some odd points. Pretty good day. It was just a good day overall in the markets. It started out good, it stayed good, and it got better into the end of the day. It was overall, excuse me, it was overall a really good day in the market today. Solid day, not a huge. Again, I don't want a huge day. I don't like up 1,000-point days, because they just get repealed the next day down 1,000. I want the market to build up on small but steady and reliable gains. You don't want it to go up too much, because if there's bad news, then the stock market goes down a lot, and you wonder what the heck is going on here. And there's always somebody who'll say, "Oh, it's manipulated." Somebody, I have to say, somebody commented on one of my Instagram posts. I'm on Instagram at InstaMitchG, one word, at InstaMitchG. And someone commented, they said on Instagram that this is all rigged. It's a rigged market. Rigged. The stock market is not rigged. And they said because tech stocks went down so much. First they tell you to buy them, then they rip your head off when they sell them. Okay, who is they? I mean, that's the first. When somebody says they, I always ask, who is they? Usually their whole argument falls apart because it's under scrutiny. But no, the market's not rigged. Tech stocks did not go up and then go down because they're rigged. Tech stocks simply did what they do in every bull market. Toward the end of a bull market, they lead the way higher. They become the last bastion of great gains. More and more people crowd into them, and everything's okay until it's not okay. The little ones go down, the medium ones go down, the large ones go down, and lastly, the mega caps go down. And then they get absolutely crushed. This is why it's so hard to own a portfolio loaded with tech. This is why, as an experienced financial advisor, I am loath to pile up into tech. As good as it could have been on the way up, it kills you on the way down. That's why tech is always considered a volatile place to be, no matter how good you think the technology is. Companies could come out with great technology, but that doesn't mean anything, because the stocks could still go down, even if they have great technology. And when the stuff hits the fan, we go into a recession, or it looks like we're going into a recession, orders slow down. Investors no longer look at GWIS technology like a good thing. They look at GWIS technology like a bad thing, meaning, how long is it going to take that company to make money from that new GWIS technology, if at all? I don't want to invest for that. I'm not looking for that kind of risk. I'm looking for steady growth, even if it's lower growth. I'm looking for steady Eddie, not pie in the sky stuff. That's what happened with tech stocks. That's why they got crushed. All right. So hopefully, investors didn't get too caught up in it. and hopefully it's not game over for many investors who overindulged in tech. You see that? Game over. Game over, as the machine, that's a arcade games used to say. Game over. Was it the Saga? Was the main maker of those big boxy machines that I used to play with as a teenager in the game rooms, at the mall. Yeah, I was into that stuff. I had fun. I didn't love it. I had some friends who could spend the entire day in one of those rooms. I could go play a couple games, but after that, you know, I was done. I was into doing other things. Um, whatever. I got along with all the groups when I was in high school. I did very well with the jocks. I was a jock. I was a good athlete, good student athlete. But I also was friends with the nerds, the really good students. I was a decent student, and I got along with the greasers in school. We had a few of those too, and I just seemed to be able to get along into with each group. So good high school experience. But I digress. So anyway, let's get back to sharing the screen. So Nasdaq up, good day. S&P up, gold up, a drop. Oil was off a little bit, but still in the 90s. You see the pump. Gasoline by me is around 385 or so consistently where I am. Wasn't it like $3 and 299 recently? But it surged at like the price of gas has just surged at like the worst possible time for the Democrats. Like literally surging the last like 2 or 3 weeks right before the election. The whole election basically is riding on gasoline, the price of gasoline, right? The 10-year at 4.2%. Um, the VIX continues to come down a little, 24. The VIX has been pretty sticky in the mid 20s. And even when the market goes down, the VIX is either held up or continues to come down. That's telling you that portfolio managers, institutional investors, probably sold as much stock as they can sell. They're probably underexposed to stocks and they're just waiting for the opportunity to get back in. Right? That's what they're waiting for. So, and let's take a look at the bond market. Bonds, just so you know, from the 3-month bond paying 4% all the way to the 30-year bond paying 4.3%, everything is above 4% now in the treasury market. A 6-month bond is 4.6%. A 2-year is 4.72, and a 1-year is almost 4.8%. You're getting some pretty good yields. I mean, you're getting close to 5% for short-term treasuries without risk. Okay, before I say that, and one of my compliance people is going to watch this video. Thank you, Rita. Is going to say you can't say that. I'm talking without risk of loss of principal. Now, the 90-day T-bill, the 3-month one, that's considered the risk-free rate of return. But once you get into 6 months and a year out, you're subject to interest rate risk. But I'm talking about risk of loss of principal and interest, and that is not a problem with Treasury bills. Okay, they're backed by the full faith and credit of the United States. So it's amazing what short-term yields are giving you, and short-term bonds. So I have clients who are all of a sudden saying, "What can I do with some cash on the sideline?" And I pull this up and I say, "I've got a solution for you." All right, so that's about it. It's tomorrow's the election. We all know it. We've all been talking about it. The stock market's gone up. It was a losing week last week, but Friday the market was up. It's up today. Um, Depending on how partisan one is, someone could say, "Oh, it's all up because the Republicans are going to sweep." I could also say it's up because it's just up and it's due to be up. I do think there's an element of a Republican victory in Congress that's lifting the market because it creates gridlock. No more dramatic spending, no more new supply of treasuries, no more supply of anything except hopefully energy. So there is an element of positivity from gridlock in the market. We'll see. I mean, it's expected that Republicans take the House, toss up in a number of states in the Senate. But, the Republicans only need to get one, the House or the Senate, to block literally everything that the Democrats want to do. And if Republicans take control of both houses of the Senate and the House, both, both bicameral Congress we have, well, Biden will veto everything. So it's hard to believe anything's going to get done, which is why the next 2 years of Biden's presidency will be considered a lame duck. But we'll see what things look like. I'm not really expecting major fireworks in the market today. I think the street has already done a pretty good job uh, getting ready for the outcome of the election. The fact is, on Thursday the consumer price index comes out, inflation numbers. I think that's going to be a bigger deal than the elections. Now, keep in mind we have the elections tomorrow, but nobody's coming into office until January 20th. Inflation, though, is going to be here, and the Fed wants to squash inflation by raising rates. And I think that's a bigger deal right now than anything Congress could do or the president. And I want you to know that what you see now with inflation, we had low inflation, we have high inflation, oil. These are very long cycles, and they don't have nearly as much to do with politics as much as you think. These are just very long economic cycles, ebb and flow of desire, of investor psychology, consumer psychology. That's a much bigger deal than just politics, because whatever the politics you get, it's going to keep changing. We've got a couple of comments out there, so let me make sure I hit those up. I'm not going to put any of these comments up on the board because they're um, really inappropriate, and they're from a site called sexchat69.site. So we're not going to put those on the board. Unfortunately, those are the comments I got today. But well, getting comments on your YouTube and your other videos does help spread the good word about the algorithms and all that. So that's cool. Thank you very much for helping me out. I think. Okay. Thanks so much for watching, guys. We'll be back tomorrow. We've got a lot to talk about. And until then, keep your head on straight. Don't make sudden moves. Oh, and last thing, regardless of what happens with the elections tomorrow, I'm not changing a damn thing with my portfolio. All right. Good night.